Madhu,
Hello.
good to have you back and thank you for joining us. And before I start the show, my sincere thank you to you once again. You've been coming on our channel during the throes of pandemic. You've been sharing your opinion. You've been advising our viewers that do not panic and convert the 2020 sell-off into an opportunity. And for those who followed you, I'm sure they've benefited from that. But now where do we go from here? We are staring at a market like never before. This market has not relented at all and there has been no sizable correction. All bull markets correct, but this one is different.
No, first of all, Nikunj, thank you for having me. I have always enjoyed interacting with me, and it's been a delight to see you grow over these years. I am a really happy man here today. So, Nikunj, I think, obviously the markets have gone up a lot in the last 18 months. There's been a significant rise in the mid-cap index, small cap index, and the indices itself. This obviously, needless to mention, is also in the backdrop of what has happened in the global markets. So our rise has not been in an isolation, essentially. And also, the quantum of money, Nikunj, being made in the last 18 months in the global markets is $60 trillion, while in India it is $1.7, $1.8 trillion. So this we've been part of a big global market boom, which is driven by liquidity and low interest rates. So my point is that will there be corrections? There will always be corrections, and the corrections, as you and I know, for last 30 years of being here, where they will always come for reasons which are not known to us today, and they will come when people are expecting it the least, right? And so, but do I really see any kind of a crash, or do I see any abrupt thing which will take the market down significantly? Nikunj, I don't see any of that. In my view, any correction which comes will still be a buying opportunity in the markets.
Madhu, I genuinely feel that this bull market has a unique differentiating character. FIs are selling and DIs are buying. There was a time when FIs would sneeze and the market would catch a flu, but that is not happening. Yesterday, Rakesh Jhunjhunwala met the Prime Minister, and I don't recall when was the last time the Prime Minister of India met anybody who's a famous investor. So even from a government standpoint, they are in a sense celebrating the rise of Indian entrepreneurs, and Indian investors are also taking a leap of faith. Very big change has happened.
Undoubtedly, Nikunj, we have known, all of us have known Rakesh Bhaiya. He's our own Rakesh Bhaiya. It's such a matter of pride that, Prime Minister putting such golden words. And it is also recognition of the investing community, Nikunj. Otherwise it was like a speculative satte ka bazaar. A Prime Minister meeting the largest investor and having such good words to speak about him is a matter of pride for all of us. And that also, as you rightly said, it also shows the government's attitude towards wealth creation in India now.
So for an average investor, Madhu, the returns in India are anywhere between 13 to 15%. Are we in for that kind of an return for next 2 or 3 years? Because even if you get a 13 to 15% return, it's a very reasonable return from these levels. Do you think that is a stretch number, or 13 to 15% from these levels also is still an achievable number?
I don't know whether the indices will return 15% from here, year on year basis, Nikunj. But I am very confident that if one builds a portfolio of sensible companies on a bottom-up basis and you do your homework properly, I think there is still money to be made, a 15% CAGR in this market on those companies and those sectors, basically. So, that kind of return is still possible.
Before I get into themes and what you've always discussed in the past, I'll throw a hard one at you. By the time this bull market will end, do you think the Sensex will be anywhere close to 1 lakh or above 1 lakh?
Nikunj, is entirely possible. See, when we were discussing 30,000, when the index was 10,000, that looked a very, very big number. When we were discussing 50,000 when the index was 30,000, that looked like a dream come true. Now we are already at 60,000. So as long as the companies will grow, in India, which is what you and I have been discussing for 15, 20 years, that this is the country where the nominal GDP is growing at 10-12%. So there will be a lot of companies which will beat the normal GDP as long as these index companies continue to grow. And one big thing which has happened, Nikunj, in this pandemic is the terminal value of lot of large businesses and lot of large companies has gone up because there has been clearly a shift from unorganized to organized sector. There has been clear shift from smaller medium enterprises to large enterprises, and some of these companies which I am talking about, they are represented in the index, right? And when you are saying that the composition of these companies is that which will continue to grow and beat the normal GDP, then clearly, index will definitely see a much higher level where we are. Because the only condition in which index will not see those higher levels is, earnings continue to grow and the P multiple contract significantly. I don't see that as a possibility. That P multiple may contract 10-20%, but will they contract significantly? That is not a possibility. So it's entirely possible that we don't know whether it will happen in 2 years, 3 years or 5 years, but entirely possible that we will see a 6-digit index in times to come.
Madhu, when the bull market started in April and early May 2020, you had identified two sectors, pharma because of the relevance and PSU stocks because of the attractiveness. Pharma did enjoy a massive moment of PE re-rating, but then came this entire US pricing issue back. Has pharma lost its sheen now that markets are much more relaxed also on the COVID front?
I don't think pharmaceutical as a sector has lost its sheen, and you have seen, Nikunj, differentiated return in the pharmaceutical sector. So when you talk about a sector, some of the large companies have not delivered even a 20-30% return, and some of the companies have delivered even 500% return, right? So that is what I keep talking about, that on a bottom-up basis there are still opportunities in the pharmaceutical sector. Clearly, the challenges which are being thrown in the last 1 or 2 quarters, and they may persist for next 1 or 2 quarters, they are main relating to logistics issues, material coming out of China, so the cost going up, the cost of containers have gone up significantly. So obviously that has clearly given some kind of a suppression to the profitability. And also keep in mind that last 18 months, the US FDA has not visited any site. So the new approvals for new products have not come because of COVID. So once that activity resumes, the approvals will come. So in the meantime, what has happened, whatever approval which I have, because I want to sell, so there is obviously increased competition which has come in the last 6-9 months, because since people are not getting new approvals for drug, the whatever approvals which I have in hand, and even at reduced profitability, I am willing to sell in the market. So I think this is more 1 or 2 quarters of disruption, but as a theme it continues. But let me tell you, I am not saying that I am very bullish on the sector as a whole. You have to know your companies really well in the pharmaceutical sector to generate differentiated returns, and those will still be possibilities. The other sector which you talked about, incrementally, I've been very, very vocal that we see a good cyclical uptrend in the economy, and the stocks in the sectors which are linked to economy, they are likely to do well. And that is what has happened in this bull market in the last 12-18 months. So whether these are PSU stocks which have done well, or PSU banks also which have done well, sectors which are linked to economy have actually done well. Sectors like metal, where India has got clear advantage because China has stopped exporting that incremental steel capacity or incremental aluminum in the last 12-18 months because of pollution and because of their own local issues. These sectors have done actually well, which are linked to economy. And it is my view that over the next 2-3 years, there is still a lot of money to be made here because the valuations out here are still reasonable. We can clearly see growth because of the economy turning around, because interest rates are low. The capex cycle, Nikunj, which was like a forgotten word in the investment community, that private capex is going to come back. But if you look at individual companies, they're all announcing capex for the next 3-4 years. So if I put all of this together, keep interest rate in mind, keep valuation and also under ownership. I want to emphasize this point of under ownership in these sectors. When did I see a Coal India in circuit, Nikunj? I don't think it happened in the last 10-15 years in my distinct memory. But those things are coming back because there is no ownership. अब बेचने वाला कोई बचा ही नहीं है ना दोस्त.
Great point. Ownership patterns have completely got skewed in favor of consumer, IT, and to a large extent some NBFCs. Madhu, let's spend a minute discussing banks. And you've argued in the past that banks are consolidating, and a Canara Bank or a SBI or a BOB, they are very cheap. But some would argue back and say that in today's world where the relevance of technology is going to be important, what would be the importance and the market share of some of these PSU banks? They may cheap, they may give you a bounce, it could be a 50% bounce, it could be a 100% bounce, maybe more, but can they be structural compounders?
See, I don't know about structural compounding, Nikunj. I am taking a 3-4 year view on these banks. So let me put some points. When you talk about technology, you go and meet the Union Bank of India chairman. I have had the privilege of meeting him. They are talking 50% of their incremental transactions in the retail coming via digital in the next 4 years. Let me repeat. 50% of the transaction coming through digital mode over the next 4 years, right? So it is a myth that these guys are not keeping pace with technology. I think they have invested a lot of money. They have hired the best consultants possible in the world. So McKinsey's and KPMG's of the world are working with these banks. They have had significant efficiency. You look at the experience of in State Bank of India. It's a delight, Nikunj. You as a customer must say, and then you will see what kind of technological changes these banks have done. That's point number one. Point number two, when we talk about these fintech companies and taking market share away, Nikunj, will you and I ever go and put our money as a deposit in any of the fintech companies? Please answer me that. I don't know, where is the asset base? And the third point is that to create an asset base, you need significant liability. Otherwise, a lot of these fintech companies are actually become kind of an agent for public sector bank. They are sourcing the loans and they are trying to sell it to public sector banks. And public sector banks are making their own margin. So I do not believe that it is an either-or world wherein only fintech companies will continue to do well and some of these well-run banks which have got assets and the liability both and which have got huge operating profit, 20-25,000 crore rupees of annual operating profit, that they will collapse at the cost of these fintech companies. I am not in that school, Nikunj.
Great point. And I just want to bring this point for our viewers that Rajiv Jain of Bajaj Finance also mentioned this point on a forum, which is that yes, fintech companies may have a commanding valuation of $2-4 billion, but none of the fintech companies have a balance sheet of even $1 billion. And bank is a business where you need deposits also to grow. But the next sector is metals, and you argued that look, metal cycle is coming back. What changes are happening in China? Given the compulsions of China in ESG, do you think the metal cycle, which already has been a great cycle for investors and for companies, it could also be a 2-3 year play now from these levels also?
Nikunj, I would say that there are some structural changes which have happened in the balance sheet of metal companies. Let me take you back to 2019 when the top 5-6 companies in the steel sector had more than 3 lakh crore rupees of debt and they had 60,000 crore rupees of EBITDA. In 2022, the same companies will have less than 1.5 lakh crore rupees of debt and they will have more than 1.5 lakh crore rupees of EBITDA, Nikunj. So from 1:5 debt to EBITDA, we have fallen to less than 1:1 debt to EBITDA. This is a structural change. And plus what is happening now, some of these companies are going to generate such significant cash flows on an annual basis that their capacity expansion which they have announced to be undertaken over the next 4 years, most of it will happen without any dilution of equity or without taking incremental abnormal debt. So that is when valuations happen. And I don't find any real justification for some of these companies to trade at 3 or 4x EV EBITDA. So I would say again, I don't know about the sector as a whole, but we own a few companies in the metal sector as a disclosure and I continue to remain positive on these companies. There is one risk, we don't know what is the extent of slowdown which will come from China. What is the extent of economic degrowth which may happen because of the power crisis, because of the property crisis which are coming. So that is one factor. We more from a sentimental perspective needs to be monitored closely. But if that gets normalized, I think metal still have some steam to play.
Madhu, the relevance of technology is increasing and the way technology companies are hiring, the way they are telling us that how they on large base also are ready to commit to a double-digit growth. What is the right way to understand IT? It's been a great performing sector, but growth also surprises us. Do you think technology stocks from here also can give double-digit returns, the big names?
Big names can continue to surprise us, Nikunj, because the amount of money which is invested worldwide in digitization and the digital share of the service which these companies are doing has increased over the years. That remains very profitable, it is very sticky, and you and I know that lots of companies worldwide continue to invest significantly in digitization. So a lot of work is coming to these service companies. So it is entirely possible that again, Nikunj, let us not fool ourselves that all 25 technology companies will continue to do well. The point only which I am trying to make, that there will be laggards within this and there will be winners within this. The whole idea should be to go do your bottom up work. Okay, these are the companies which may have 25% growth. I am still getting it at a 20p or 18p, and these are the companies which can still give me those positive delta, and the sector tailwind is there with me. So it is all bottom up stock picking rather than playing the sector. You could have played the sector 18 months back and bought anything and made money because the whole sector did so well. But from here on, I think it will be more bottom up.
Madhu, we have two companies which are above $2 billion, almost $2 billion, Reliance and TCS. Do you think in this decade, we could have a serious shot of an Indian company being a $1 trillion company?
One decade is too long a period, Nikunj. I don't think we will interact hundreds of times before that, I hope so. And we'll keep talking about it. But I am sure aspirationally there is nothing wrong for these companies to dream that they will become $1 trillion in our lifetime. Now, whether it takes 10 years or 12 years or 15 years or it happens in 8 years, I don't know that. But it is entirely possible that India will see some of these companies become very, very large. And how large, how many billions and a trillion, that is very difficult to guess today. But you bring a great point that is it possible, can we emphasize today that one of these companies become a $1 trillion company out of India? And I would say entirely possible.
The themes what we've discussed, whether it is PSU banks, pharma, your view on relatively economy-related stocks, that was Madhu Kela's view 3 months ago, 6 months ago, 9 months ago. What is Madhu Kela's new idea? Every time we interact, at least I look forward to understanding something new and different.
Nikunj, I think when the markets you have to look at relative attractiveness, right? And you have to look at risk and reward. So I continue to believe that some of these companies, even though they have risen from the bottom, they still have a lot of juice. So I really don't find a new need to keep finding new ideas or new theme. I feel that this theme still is very powerful. Hey, Nikunj, mere bhai, corporate profitability had gone to 1.5%, 1.6% at the bottom of the GDP. It is back to 3%. In 2007-8, the corporate profitability had gone to 8% of the GDP. If those massive profits have to come, I am not saying that we will go back to 8%, but even if you go back in this cycle to 6%, just imagine what kind of money this economy-linked companies will make and what will be the profit pool. Then we discussed about the under ownership. So I feel still there is a lot of juice. The credit to GDP ratio in India is still only 60%, while in China it is 150, 170%. That in this capex cycle, which is staring in front of us, if the government on one hand takes care of investing huge amount of money in infrastructure and the private capex comes through, then I think there is still what we are talking, Nikunj, I was discussing with a friend of mine. In my view, there are only 7 banks left in India, including public and private, which can write 1,000 crore check for a capex program, because some of the large banks, they don't traditionally have not funded capex, right? So what will be the pricing power of these banks when the economy really revives and the credit, the demand for credit comes up? So it is not there in the analyst world. No one is predicting. My own analyst is so hesitant, keeps telling me that, sir, let us model only 10 or 12% growth. And I keep pushing him, at least board मेरे को करके तो दिखा 20% growth होएगा तो क्या होता है? So I think these are all in the realm of possibility, and on a cyclical basis, Nikunj, there is still power left in this economy. We are playing a cyclical uptrend, and believe my words that we will talk after 2-3 years that there is still steam left in some of these companies and sectors which we are talking about.
I can
आपको मैं एक बात बोलता हूँ निकुंज, we discussed about privatization.
Forum, it's
See, there was
before that.
No, I am saying I'll just give you one example, and this is a hypothetical example we are saying. I read somewhere that Steel Authority of India is planning to sell their steel plants individually, right? So there are 5 plants which will get sold individually. That is what hopefully the government is working on, and that may be model of investment. Nikunj, you get one guy who has worked in Steel Authority of India in past and decode this. If this disinvestment happens, what will be the value of Steel Authority of India stock? Now, there are a lot of if and but. We still have a time. We still have the process to run. And which is why you have to take a leap of faith that it is going to happen. If you belong to that school of thought that it will happen, then clearly there is still upside left in some of these companies. And Nikunj, my request, we have discussed a lot of sectors, a lot of companies. For the ease of giving example, please run requisite disclaimer that I have interest in whatever I have spoken, and people must consult their advisors before acting on it.